As it happens, the economy is doing fairly well more than a year after the last hike. Therefore, the risk of a recession has expired. Surprisingly, I have been a market watcher for almost 30 years, if not more. I've also covered and lived through a lot of recessions. Rarely do recessions occur when all markets predict one is on the horizon. The people at the market are not very intelligent. Since we frequently deal with clients and institutional investors that consider a recession to be their worst-case scenario, the fact that so many people believe that a recession is near, and we see it just means that everyone is suddenly an excellent economic forecaster. Furthermore, no one is able to predict the economy, as you are aware. The only reason we believe a recession is less likely is because everyone believes one is likely. We don't attempt to predict the economy. It makes sense that some things are deteriorating. I suppose I will not attempt to ignore it. We are aware that the job market is becoming more lenient and that customers are running out of extra funds. We also know that the housing market has become quite challenging since it is unaffordable. Then there are regions of the nation where inventory has significantly increased. Spending on durable goods, such as vehicles and appliances, is completely collapsing. I mean, used car prices will drop significantly. A lot of excess products inventory has been destocked, and there has been an inventory adjustment. The slowness is being caused by those. Oh well, that means this is going to lead to a recession, is the error I believe everyone will make. First of all, inventory, durable goods, and housing are all very rate sensitive. Therefore, all of those turn around the moment the Fed begins to cut. Second, the corporate bond spreads, credit markets, bond market, and quality spreads, all of which you would expect to be exploding in the event of a recession, are completely mid-cycle. Examine the stock market as well. I would say that someone is shouting at the market if they declare they are bearish and believe a recession is coming. I mean, nobody I know has ever made money. It's not that difficult, really. It's noteworthy to note that that represents a compound annual rate of almost 15%. Oh, I see. And it's, about 15% in profits, plus an additional 5% or so from multiple expansion. Let's just perform an interval in reverse, I would suggest. When I worked at JP Morgan in 2008, S&P earnings for the previous year were predicted to be $60. The top watermark for earnings prior to the great financial crisis was $60, and some predicted that the S&P wouldn't even reach $60 for 10 years. As you point out, the larger scale miners can be really inventive, so that's actually beneficial. Thus, mining is, in my opinion, really very significant. I mean, Bitcoin depends on mining. After all, without mining, Bitcoin would not exist. Since the miners are basically beta to Bitcoin, I consider them to be stocks. So I'd say it's been more difficult to deal with them than stocks. Let's check the Nvidia stock this morning. Piper Sandler rated the company as overweight with a price target of $175 and called it a top large-cap choice, stating that it's a must-own due to the ramp-up of its Blackwell chip. Today's pricing is $148.07. Guys, you brought up a few of the hyperscalers. Nvidia received some positive feedback. The first is that Piper makes it a great choice. Then there's this quite intriguing note from Melius. Ben Wright only reaches $185. Our excitement for Blackwell has increased even further, he says. According to Ben, abandoning Nvidia with Hopper is comparable to abandoning Apple following the release of the iPhone 1 or 2. According to their most recent predictions, David, hyperscaler capital expenditures will total $282 billion over what time frame? Year after year. With Oracle, Amazon, and Meta included, it would be rising 24% annually. How it stacks up against some of the Morgan Stanley figures we received is unknown to me. I take it that was more than $100 billion. They were, in fact, $300 billion. Yes, exactly. I must verify the figures. However, there has been something intriguing that I've been attempting to concentrate on. Last week, there was an information story. Additionally, I listened to this podcast, hosted by Ben Horowitz and Mark Andreessen. Although it was done before the election, it is unrelated to that. It was about, or at least they brought up, the notion that the development of huge language models, especially at OpenAI, is, in a sense, stalling out as they move from one model to the next. The future flagship model, Orion, is also discussed in the *information* article. There, I suppose, it's the code name. Although it performed better than previous models, the quality improvement was far less pronounced than the difference between ChatGPT 3 and ChatGPT 4. Naturally, those are the final two models. On that episode, Andreessen made the same statement. It's kind of fascinating, so I'm simply marking it. Is their data running low? Why? Is it accurate? Is progress actually slowing down? If they're actually consuming as many or more CPUs, that wasn't anticipated. Therefore, it's not as if the problem is with the chip. It might just be something unclear. Certainly unclear to me, Carl, or it might be a data-related problem. But if the trend abruptly halted, that would have significant consequences. I am aware of the other, and to avoid deviating too much from your point, Andreessen described America as an economic coiled spring in a recent tweet. According to him, our GDP should be expanding by at least 4% and ideally by 6 to 8%. He claims that since his birth, growth has been violently repressed. We return to these debates after that, which would be intriguing. We talked about the need for people throughout the first Trump administration. Without people, how are you going to achieve that kind of growth? Perhaps generative AI and robotics will be used once more. But perhaps that's the point, Sarah, if it stops moving forward. Mark Andreessen and a lot of other specialists, including Jensen, will be heard. We all believe it's on a one-way ticket, faster and higher. So I found that report, which cited ChatGPT employees as sources, and then Andreessen essentially stated that on the podcast as well. Intriguing. That's right. The rate of change will only accelerate exponentially, by the way. Well, maybe bears prevailed. It's fascinating. The new president's rhetoric over Taiwan will enrage the Chinese since they will have to pay for their own defense, which means Taiwan will likely end up purchasing F-35s and Patriot missiles from the U.S. to demonstrate their willingness to cooperate. This has been an existential threat to Taiwan Semi and possibly Nvidia the entire time. So you start to think about how it will all work out. How about semis? We brought up Nvidia. Apple is being pushed up to the top of the market capitalization ladder. It has undoubtedly had an amazing run, but not all of the stocks in this market are Nvidia. How do you evaluate the semifinals? This is the one instance when I firmly believe you have witnessed leadership truly fracturing or splitting, and this has been the case throughout the spring, summer, and fall. We are aware of the Nvidia chart's excellence. We are aware of Broadcom's excellence. AMD is where? Lam Research is where? Where is ASML? Samsung, where are you? What does leadership look like? It is, in my opinion, the fastest of those. Underneath, it is the weakest. Here, only a quarter of the semis are above their 200-day moving average. For the following 4 to 6 weeks, semis do provide some decent seasonality. If you had a bounce, I believe I would be more likely to fade it in the semifinals than to chase it. I questioned you about Berkshire selling Apple before, so now I'll ask you about Nvidia's current status and its participation in the Dow, as well as your thoughts on it in light of your observations over the years. Indeed, on some level, the Dow may have felt somewhat out of step with the current state of the economy due to the prior inclusion of Intel and the lack of a play on Nvidia, which accounts for 7% of the S&P 500. One could argue that it is simply clinging to a high momentum play after it has already made its biggest gains. I was just examining the market capitalization comparison between Apple and Nvidia. Right now, it's neck and neck. Nvidia will receive almost half of the net income and a third of the revenue in the upcoming year. It is evident that the stock is more costly, but its growth rate is significantly faster. First of all, just because a stock is listed on the Dow does not provide you a fresh incentive to purchase it in the near future. According to history, there is absolutely no reason to purchase. The amount of money indexed to the Dow is quite little. You know, it's far more about the way things